global oil prices have experienced a sharp surge due to ongoing instability in the Middle East, a region that plays a critical role in the world's energy supply. This sudden increase in oil prices is creating ripple effects across global markets, impacting economies, businesses, and everyday consumers. As tensions continue to escalate, experts are warning that the situation could worsen before it improves. One of the primary reasons behind the surge in oil prices is the growing uncertainty surrounding oil production and supply routes. The Middle East is home to some of the largest oil-producing countries, and any disruption in this region immediately affects global supply chains. Concerns about potential conflicts, sanctions, or blockades have led traders and investors to react quickly, pushing prices higher in international markets. As a result, many countries around the world are now facing rising fuel costs. Petrol and diesel prices have increased significantly, putting pressure on transportation systems. This is especially challenging for developing countries that rely heavily on imported oil. Higher fuel costs mean that transporting goods becomes more expensive, which eventually leads to an increase in the prices of essential items. The impact of rising oil prices is not limited to transportation alone. It is also affecting food prices globally. Since food production and distribution depend heavily on fuel, any increase in energy costs directly raises the cost of farming, processing, and delivery. Farmers are facing higher expenses for running machinery and transporting crops, while retailers are forced to pass these costs on to consumers. This is contributing to a broader increase in the cost of living. Energy importing nations are among the hardest hit by this crisis. Countries that depend on foreign oil supplies are now struggling to manage their budgets as import bills rise sharply. Governments in these nations are facing economic pressure, as they must find ways to balance higher energy costs while maintaining stability in their economies. Some countries are already experiencing currency fluctuations and widening trade deficits. As a result, in response to the crisis, several governments have started releasing oil from their emergency reserves. These reserves are intended to provide temporary relief during supply disruptions. By increasing the available supply in the market, authorities hope to stabilize prices and reduce panic among investors. However, experts caution that this is only a short-term solution and may not be enough if the crisis continues for an extended period. Economists are also warning about the risk of rising inflation. As oil prices increase, the cost of goods and services across various sectors tends to rise. This can lead to inflation spikes, reducing the purchasing power of consumers. Central banks may be forced to take action by adjusting interest rates, which could further slow down economic growth. The combination of high energy prices and inflation presents a serious challenge for policymakers around the world. Financial markets are currently experiencing high levels of volatility due to the uncertainty surrounding the situation. Investors are closely monitoring developments in the Middle East, as any new escalation could lead to further price fluctuations. Stock markets, currency values, and commodity prices are all reacting to the ongoing crisis, creating an unpredictable economic environment. Consumers are already feeling the effects of rising oil prices in their daily lives. From higher fuel costs to increased prices of basic goods, households are finding it more difficult to manage their expenses. Many people are cutting back on non-essential spending as they adjust to the changing economic conditions. Businesses, on the other hand, are being forced to adapt quickly. Companies are revising their pricing strategies to cope with higher operating costs. Some are increasing prices, while others are trying to absorb the costs to remain competitive. Industries such as transportation, logistics, and manufacturing are particularly affected, as they rely heavily on fuel for their operations. Looking ahead, experts believe that the oil price crisis could last longer than expected if tensions in the Middle East are not resolved. The situation remains uncertain, and much depends on geopolitical developments in the coming weeks and months. Until stability is restored, low markets are likely to remain under pressure, and the effects of rising oil prices will continue to be felt worldwide.